This is your market recap for November 26th, 2025. As you can see today, we once again played bullish. These two daily highs that were an SMT were targeted. And the reason for that, even though there were SMTs, we did not have any higher time frame confirmation like an SMT or anything like that, that we would be playing bearish because of that SMT, especially given how we swept this low. If we just look on the weekly time frame, we swept this low, go back down to the daily, barely closed below it. And that tells us that we are most likely at least targeting these highs. So regardless of whether we have an SMT or not, these are likely draws. Now we go down to the 4 hour, we can see here we expanded yesterday. And so we retraced a tiny bit this morning, knowing that the draws were here. Things that happened on the lower time frame stopped us from retracing a little lower, and then we expanded upwards to take out both of them. Hourly time frame is where usually is what I'm figuring out, where the bias for the day comes in. So we see here this high here, London session low, retraces down, reacts off of this 1 hour fair value gap bullish. We then retrace up, we expand up, react off this 1 hour fair value gap, play bearish, react off this hourly once again, play bullish, close outside of this 1 hour, play bearish once again, tapping down to this 1 hour once again, and then we finally expand up to those highs. Now, this 1 hour fair value gap is respected, disrespected, and whatnot, so we can just throw this one out, right? But what matters to us is how this 1 hour is holding it. Even though we have sell side pressure from this 1 hour fair value gap, this fair value gap is still holding it. Even though it closes outside of it here, right, with this bearish candle, this 1 hour fair value gap is still validated. And then from there, we obviously expanded up to take out those highs. 15-minute doesn't give us much more. We're here. 8:30 news came out, gave us a larger sell side wick on ES than NQ. So first thing we do when market opens is rally up, take out these highs. We then come down, tap once again, constant encroachment of this hourly fair value gap, SMT with that 8:30 data wick. And then from there, we expand upwards, targeting these highs, which were our targets for the day, as you can see, especially with Thanksgiving being tomorrow and a bank holiday being tomorrow. PM session is pretty much just off the table, as you can see, just no volume whatsoever. 5 minute gives a little more insight. We have to mark the 8:30 move, we have this 5 minute fair value gap here, validated with this rejection here, keeping us inside of that. And then when we close outside of it, this candle is expected to tap back down into it, which tells us we're targeting these highs up here. Now from there, you'll see it easier on the 1 minute time frame. A lot of up and down. Rally up one more time, take out this high. Then we finally come down, take out this 8:30 data low there, and these relative equal lows, not to mention. React nicely off of this bearish fair value gap there, which is important. So what does this tell us? SMT here playing bullish, still reacted playing bearish using this 5 minute fair value gap. Nicely reacted off constant encroachment. Come down, try to take out this low, but we fail. So then when you reverse upwards, close outside of this 5 minute, come back down into it, perfectly reacting off of it with these two candles there. And then from there, expanding upwards until we reach those daily highs. This right here is trade of the day, but let's start at the beginning of the day. We have this 5 minute fair value gap, or inverse fair value gap, like I mentioned, with the draws obviously being this high. We go up there. We have SMTs of these highs. This was personally a trade that I took today and a trade that I lost today. I did learn from this to not take anything within the first 15 minutes. There might be a one-off chance where the market will expand within those first 15 minutes and not come back, but I'd much rather miss out on those than enter more often in the first 15 minutes and losing. Just after analyzing my past trades and the past 2 weeks of market conditions, the move doesn't really happen within those first 15 minutes. And even if it does, there is a very high likelihood that there will be some sort of inefficiency that price comes back down to, allowing you to enter into that move. Anyways, so We had these SMTs here, which was the big frame of my trade, but price wanted one more pump up, so it did that, took out this buy side, and then we came down again here. If we were waiting until 45 here, I would have seen this pump here, seen that sweep of liquidity, and then still targeted these lows down here before playing bullish, right? Because we did take out these highs. If we are playing bullish, we're going to have to see some sort of draw on liquidity. And if we're going to take out this one, might as well take out this one. If we're going to take out this one, might as well take out this one. And if we're going to take out this one, might as well take out this one. So we take out all of those, especially with this being data wicks, right? It's 8:30 data wicks. Those are likely draws. But then from there, like I said, we put in that SMT. So the second we start with our higher time frame bullish bias, we have this inverse right here, validated right there. As soon as we rally up, close in it, rally up one more time, close outside of it, we're in there. Stop could be here, right, at this constant encroachment, but since it's so close, wrong thing, I'd like to be safe and just put it below constant encroachment of this one, which is a good thing because market consolidates, almost takes it out, and then rallies all the way up to our profits there. And that's, like I mentioned, the profit for the day as we just consolidate throughout the rest of the afternoon. But to continue from that, we have this almost stop us out, nicely react off constant encroachment of this wick right there. Finally expanding from there, targeting these highs. We take out those highs, we retrace perfectly at equilibrium, all staying within this 5-minute inverse fair value gap, which was validated here. And then while doing that, we have this 1-minute inverse fair value gap created and validated here. So we then come down off of that, reacting off this 5-minute once again, reacting bullish, close outside of it. This could be another entry here. The high of this candle over here, but the inverse fair value gap, the high of that. Stops could be this wick. They could be, well, I wouldn't like them to be this wick because that's a little too close. I want to allow price some discretion to roam a little lower than that. So I'd personally stick my stop right below constant encroachment of this wick, and then obviously target the same highs. We could do those ones. We could do both. Either way, decent 1 to 5 on that one during the macro as well, the 1050 to 1110 macro. Like I mentioned, final profit up here consolidates because that is the target for the day. Going into the future, we have Thursday, bank holiday, and Friday, no news after the bank holiday. I don't expect a lot to happen. I really think we're just going to start listing lower because we did and we have now both swept these two highs, and we have a big expansion to make up for. This right here looks like a big gap to me. This one daily fair value gap right there. If we go down to the 4-hour, that is exactly where I was looking. Right there looks like a prime example and a prime place for us to retrace to. Or we could continue bearish, right? This sweep here does not mean we are higher time frame bullish. It just means that we are targeting these highs for our retrace. We'll have to see whether or not price even wants to retrace from here. I assume it will. And then the pivotal thing will be that daily fair value gap for me on that. So this has been your market recap for November 26th, 2025.